India has come a long way since its independence from the British rule 75 years ago, and so have the country's stock markets. While earlier the common man held back from investing, today a deluge of retail investors have flocked to Dalal Street. Let's take a look at the ups and downs, twists and turns. Sakshi takes us through the defining moments that have shaped Indian stock markets.
Well, India has come a long way since its independence, and so have the country's stock markets. On the occasion of 75 years of India's independence, we take a look at 7 defining moments that shaped the Indian stock markets, beginning with the launch of Sensex back in 1986. Now, even though the Bombay Stock Exchange, the oldest exchange in Asia, was formed back in 1875, there used to be hardly any trade back then. It was the launch of Sensex, the index of 30 largest stocks on the Bombay Stock Exchange, that was the first landmark event in independent India. Next, we actually saw 1991 economic reforms that were enacted by the P.V. Narasimha Rao government and also steered by Manmohan Singh as the finance minister in 1991, and that liberalized the Indian economy and opened up the Indian markets to foreign capital. And this landmark reform really led to doubling of the Sensex from levels of 1,000 to nearly 2,000 back then. Enter the 1992 Harshad Mehta scam, a scam of around 4,000 crore rupees that actually shook the Indian stock markets and led to a massive crash. This scandal exposed the loopholes in the Indian banking system, the market regulator and the transaction system of BSE. And soon after that, Indian capital market regulator SEBI introduced a new rule to cover those loopholes as well. The NSE was also incorporated back in 1992. Now, the Reliance Industries IPO in 1977 brought in the equity cult to masses. The company was then known as Reliance Textiles Industries. The IPO changed the way Indians invested in India, as the IPO got oversubscribed 7 times, something that was not seen before that. Then the era of passive investing, or investing via mutual funds and stocks, began in 1963 with the formation of Unit Trust of India, UTI, the initiative of government and RBI. Soon enough, there were also private sector funds that entered the Indian markets, giving Indians a safer way to invest in Indian stock markets. Next, the COVID-19 pandemic, severely disrupting the financial markets and the real economy worldwide. Indian stock markets, Sensex and Nifty, logged their highest losses ever of over 13% intraday in March 2020, post the announcement of the nationwide lockdown. But the markets soon began to also recover. The lockdown led free time for many people. Job losses, salary cuts led to an influx of the first-time investors into stock markets. The new demat accounts also jumped to a record high of over 1 crore in FY21. Not just the individuals, companies turned to stock markets to raise cash. 63 companies raised a record 1.2 trillion rupees via IPOs in 2021. The new age digital companies, Zomato, Paytm, Nykaa, Policy Bazaar and many more made their debut on the stock markets as well. And lastly, India became 5th most valued stock markets in the world in March 2022, beating the UK, Canada and Saudi Arabia. Currently, the US is the world's biggest market, followed by China, Japan and Hong Kong. Also, the year 2022 saw history being created yet again with the launch of India's first ever bullion exchange. The exchange is now expected to facilitate efficient price discovery of gold, ensure standardization, quality assurance and sourcing integrity, and therefore help bring in more foreign traders into India. Just as many market experts really believe that there is only one way the markets will go, or one direction that the markets will go, and that is up. And there's hoping that when India is celebrating its 75 years of independence, the next 25 years turn out to be great for the Indian investors, and therefore the stock markets can create great wealth for Indian investors too.
If you like the video, do like, comment, share and subscribe.